being able to understand, what's actually happening in the markets and how we can have the highest probability that things are going to go the way they're supposed to go. Okay. This is essential for us to be able to do and to be able to understand how to do it. Okay. All right. So, first and foremost, we need to understand that the way in which we get our, let me turn this down a little, please. It needs to be background. So if it is a little bit loud, please do let me know. I don't want it to be infringing on the audio. I want it to be background, just allowing you to just sway in the morning. All right. So how we can increase our win ratio. Now, what's the benefits of us increasing our win ratio is confidence, is that good winning trade feeling. All right. Now it's easy to turn around and say, yeah, we should be trading without emotions, blah, 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 this, that, and the third. But in reality, it's not possible. Yeah. In reality, you can't trade without emotions. Why? Because you're an emotional being. You're human. And emotions are what drive us, whether you believe it or not. Whether your missus doesn't think you're very emotional and connected into your emotions, or whether you think to yourself you're somebody who you never cry or you never show emotions, you do. You're driven by your emotions. We act based upon how we feel. All right? We feel good. We want to go out on the weekend. We want to have a drink. We want to do this. We want to do that. We feel bad. We're not feeling up to it. You know what I mean? We do something else. Yeah, we talk a certain way. We have a certain energy. You know what I mean? We may be snappy. We may be rude. Yeah, this is emotional response to life. Okay, and it comes out more than I've ever experienced from a place where you can actually audit it and see the consequences of it in trading. Yeah, trading is the one thing that can really let you be able to see how emotional you are. Even if you box and you get in the ring and you get punched in the mouth, your emotions, it's not something you can really gauge the consequences of your emotional responses to getting punched in the mouth. Because whether you're emotional about it or not, you're still going to get punched in the mouth by the other guy if he's a better boxer than you. That's the reality. Okay, but you see, with the trading thing, it allows you to be able to go through these emotions, and after the fact, normally is after the fact, which is what we try and put things in place that's not after the fact, it's something we can manage. You realize, right, what did I do? Why did I do that? And I suppose for me, it kind of goes back to thinking to myself, is this what it feels like to, have an addiction, or to be, I've never been somebody who's had an addiction to anything. I know there's people out here who have been addicted to things, have had certain vices, but it's not necessarily my bag. But when you are trading and you do things that you're not supposed to do, you don't follow your own rules, you lose a trade and you start revenge trading and hitting the button. You get to the point whereby you're blown an account, or you know your rules, you know what you're supposed to do, but yet you're just doing something else. You realize how emotional and how you are controlled by your emotions. Yeah, and that is the skill of trading. That is the skill of trying to be a successful trader, is can you control, or at least understand, your emotional triggers and your emotional responses, so that you can prosper from them, so that you can use them to inform you in other ways, opposed to you losing money. Can you make it inform you in a way whereby you can make money from your emotional responses? You can understand that when you feel like this, you should do that. When you feel like that, you should do this. All right. So that's what we're going to talk about. We're going to discuss. Now, ultimately, being in control of your emotions and being somebody who you think, I'm not an emotional person. Well, that alone is not going to make you a great trader. Sorry. Yeah. It's a combination of them. It's like you turn around and saying, you're in control of your emotions. That means you can make you a great boxer. Well, no, you still have to know how to box. Yeah. You still have to know how to throw punches, slip punches, move around the ring, etc., etc. But we're going to make an assumption that we understand how to box. We understand how to look at technical analysis, market structure, price action, Had to be able to see things and go, okay, I believe that, markets are in a premium and maybe we're looking for potential sells. I understand that. Let's have a look at this Euro USD, for example. Okay. So Euro USD has been making lower lows, lower highs, lower lows, lower highs, lower lows. Now, what we're going to do with this Euro USD is we're going to look back in time and look to see about times that we'd be successful in our trading. All right. So for a start, I'm going to ask some questions. Okay. And we're going to answer them. All right. All right. So I'm going to make this line here a color. And the color I'm going to make this line is like a pink. Okay. I'm going to make this line down here a color. And the color I'm going to make this line is like a greeny kind of color. All right. Let's go here. All right. So let me ask you guys a question. All right. And I want you guys to get some engagement here. All right. Some engagement. I want you guys to unmute your mics and talk to me. I was going to try and do this. Let me type it in. Let me get some bigger screen here. And let me try and type it in. Okay. So I'm going to put some numbers in here. Yeah, I'm gonna put some number. In fact, I'm not gonna do it like this. It's gonna take too long. Let me just write it. Okay. So we got 1. We got 2. We've got. Let's even omit that one. Let's just got 3. All right. It's got 4. All right. So. I'm gonna do another one also over here. I'm gonna put in A over here. B, C, D. All right, so guys, let me ask you a question. Can somebody tell me, if they could choose one place, and it's not a trick question, it's an open question. There's multiple answers because we're going to analyze one of the numbers. Where would you like to sell from? If you could go back in time, where would you have liked to take a nice sell position from?
Number 2.
Number 2 sounds good. All right, let's go for number 2. It's not the only answer, but it's an answer. Now, let me explain to me why number 2. Why number 2?
Personally, Carl, we saw it touched into a premium zone already. Then we saw a reaction. It didn't break that low necessarily. So that would have been like some sort of interest to say, all right, cool, we've hit support. We're gonna touch back up. And then we see it almost, or probably on a bigger time frame, it almost looks, what's that weekly we're looking at?
I'm on a weekly just to fit everything on the screen. But either way, remember, weekly doesn't matter. From the weekly to the daily to the monthly, all the same stuff.
There'll be structure in there to see some sort of pattern.
All right, great. I love what I'm hearing. All right. So, and now I'm going to zoom in and knuckle into what G-Vans just said, because he said something that everything he says made sense. All right. I'm going to put some dots in. I'm going to put some other numbers in. I'm going to try and draw them in. Where would your entry be? Okay. We're going to go here. And anyone can answer, not just G-Van. Anyone can answer. Where would be your high probability entry in regards to this trade? Bearing in mind today's session, we're about how to get our win ratio high. All right. So I've tried to put in 3 numbers here. I mean, my 3 looks like something. All right. But let's look. Where would be your high probability entry? 1, 2, 3, or 4?
I'd be going for 3.
3, okay, no problem. Anybody else got any other numbers for a high probability entry? And it doesn't matter that we're looking on a weekly. We could imagine it could be any number. Does anybody have a high probability entry? Where would it be? So we've got G-Van says, I'm going to list these out. G-Van says 3. Anybody else? Anybody else? Where would be your entry for your high probability entry to make sure you're getting a high win ratio in your trading? Anybody? Nobody else?
So everyone's sleeping. Rise up, man. Walk on.
Rise up, man. Walk on. All right. Cool. Either way, people may be busy in the middle of something or whatever it may be. All right. So let me ask you a question then, Chiefs. If you are saying your entry is free, I'm going to ask you, where is your stop loss?
Stop loss would be above 1, really. Above that premium zone, just outside of it.
Okay, no problem. So Jeeves says here, with his stop loss above here, and I'm going to give him a B for his entry. All right. So as Jeevan said, is this one here? Okay, cool. So if we're talking about getting up our win ratio, what we want is we want as much confluence as possible. All right. Now, see, the problem with what I'm saying to you right now is that you have the power of hindsight because we can see what actually happened. In reality, this is what the market looks like. Yeah. The market was pushing up bullishly like so. All right. Let me make this white. Let me make it thin. I'll make it even a different pattern, dotted. The market was pushing up like this. It came up into a premium, definitely ticking the box for Jeevan saying this. And Jeevan's a great example because he's somebody who's learned so much so quick. He's been fully engaged, every day, locked in with me, sessions in the middle of the day, asking questions, consistent, and he's young, Jeevan's got very, very high probability that he's going to be a profitable trader at a young age, to give him a lot of options to invest, to do other things with his life, just by his energy and his habits. Okay, so markets were making higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs. Coming into a premium. Now we came into a premium about from over here. If you really want to go there, there was a higher high. We're in a premium. We will look up against this pink line. We came back down. We made another kind of ever so slightly lower high. We came back down, made a higher low. We came back down, made this wick of a higher high. And then at this point in time, we've seen some difference that has just happened. What have we seen happen? Can anybody articulate what we've seen happen at this point here? Anyone articulate of what we've seen happen after this market's come up here to this point here? What have we seen happen next? The market came up here.
What do we see? A change of structure?
We did see a change of direction, change of break of structure. So the market went and it broke this low. So from making all of these, look, from all the way down as far as we can see, the market's just been making these higher highs and higher lows, higher highs. Now we've broken a little bit of structure here. We've made a lower low, okay? And then we're at this point in time, we're looking at things because we don't know what the market's going to do now, because it might just make this break this little low and it might continue to push up. We're not believing it should do because we're in a premium. We're set up for the sell. But we want a high probability trade. We need to wait for, this would be the indication, right? So what comes next after the indication?
Correction.
We have to wait patiently for a correction. Now, how do you identify what a correction is? Look, you want to see some different color candles in the direction that you're looking for. All right. So I don't know why this isn't moving like that. It's crazy. It's making. I'm clicking. I want it to go a whole candle through and it's mucking about. So we've seen the market push down into here. So if we was to put some lines in of where we broke structure, have a look. So here was the structure going across. Yeah? Stick with me. Yeah? Follow me. It's about being able to see this, because in real time, things are going to be happening and there's a lot more energy and emotions. You have to be able to see the market retrace. So come back into these levels of where it broke. This was the structure that was broken. You want to see market come back into that energy. Because look, from here, this red candle, the market's leaving from that area, And here we've seen the market coming back, correcting. Now, if I drop my time frame down, it will look clearer. Watch. Okay, now we see it. The market broke through this area. Actually made a little correction here if you really want to go there. Okay, but let me tell you why 3 wasn't my choice for the high probability entry. Because you want to see an indication, correction, and continuation. After you get a closure below your continuation, this is a higher probability trade that the market's going to continue going into where you're going. You may have shaved off a little bit of reward because your lot size may have to be bigger. Because if you're placing your stop above these highs, which is a good place to place your stop, safer stop for a high probability trade, then you're not entering up here in the tap in you're going to be entering when that market closes below. In this instance, it will be this little energy here, this little wick here. That would be your entry, because there you've got an indication from here. Have a look. Indication below previous structure. You've got a correction. Even if you took this correction, you still couldn't execute your trade here on the continuation. Why? Because it didn't close below this wick. Do you understand? Do you see how the patience comes into involved in the rules? Even if you thought that this was the correction coming up here, yeah, and then this was a continuation, you haven't pulled the trigger because the market didn't close below this wick. So even then, you're sitting there patiently waiting for a closure. See this candle here, closed over here. Now you can hit the button. You can hit the button here. And the safest stop is here, all right, above the swing high. Okay, but an aggressive stop, which I'll always tell you what the aggressive stop is. This is in more larger lot size, is above the last high. Now you can backtest this as much as you want to see whether how many times the aggressive entry is successful and how many times the safer entry, wins. And you can see what the difference in risk to reward would be. Okay, but I'm saying this. If you want to increase your win ratio, hitting over here is hitting on the volley. What do I mean by that? I mean the ball's coming down from space, the goalkeeper's kicked it out, and you want to hit it on the volley. There's nobody around you. What you could do is you can control that ball and bring it down and then put your foot through it as and when you get a closure below this level. But hitting here is a higher risk entry with a lot. It's going to decrease your win ratio. Yeah, this is hitting here is ultimately break and retest. Is a break and retest strategy, whereas this here and this closure is an added confirmation that the markets are doing what they say they can do. Now let's see the difference between this aggressive entry, which is stop above the last high here, and this stop above this high here. Let's see how it does, because I don't know what it's going to do. Okay, as in on a smaller time frame, we might see a wick that comes and stops us out. I'm going to hit play. And straight away, both trades are doing very, very well. But the point is that you've taken that trade after you've got a confirmation. All right. Now, this is going to substantially increase your win ratio. It might not necessarily be the case that you've substantially you will increase your profits also, all right? But this trade might only be like a one to, for argument's sake, let's imagine that on a bigger picture. I'm going to zoom it out to my weekly. I'm zooming out all the way to my monthly. Obviously, we were not going to be taking monthly trades. I'm just doing it so that we got the data, all right? Because if I go too small, this is going to say it doesn't have the data for me. Let's imagine, for argument's sake, you targeted this level here. We can see this is a level of swing structure. If I was to put in some dots, my dots would have been low, higher high, higher low, higher high. I think we can all see that and agree with me. All right, so let's imagine that you targeted here from this big trade. Let's pull this down to about here. That trade here on the bigger, let me zoom in so I can't see properly. On the lower risk entry, we've got a 1 to 3, okay, which is above the last high. And on the bigger risk entry, we've got a 1 to like about 1.5. All right. Now, I'm not trying to say that we're going to be taking trades on the monthly and the weekly for 1.5. I'm just showing you, because markets are fractal, that higher probability trades are not taking it on the retest, are taking it on the continuation closure. That's my point. Of course, we could get in here on a smaller time frame than a daily zone. We're not taking trades and sitting in it for 3 months or 2 weeks. I'm just showing you from a structure perspective, okay, and this market run down here. Now the reality is this. Let me give you the reality. If we're looking at it from a bigger picture, I am expecting this market to get down to here. If you really want to go there, I'm expecting this market to get down to here. Why? It's a bearish market. It's making, here's a high. It's making lower lows, lower highs, lower lows, lower highs. This is a bit of a concern. This is a bit of an equal high over here. Okay, so I'm at least expecting it to get down to this level, because maybe the market wants to consolidate now. So I'm at least expecting it to get down to here. So really, if I wanted to, we can pull out this. Okay, and let's drop out. Let's go in down and see what our more aggressive entry was. So now it looks a little bit better than what I was saying. One's a 1 to 2.5, 3, and one's a 1 to 5, 1 to 6. Okay, that's much better. All right. Now let's hit play. See if we even get down there. Let me move this to the daily candles. Okay, congratulations. All right, because I'm looking on the bigger picture as well, I'm taking this into consideration. Now, can you understand how this entire trade has been about market structure and been about maximum confirmations? We didn't hit on the volley, because that volley, the market could have come back. Remember, see where that entry was over here? The market actually could have broken structure and then decided, as it's done, I'm sure many times for you, broken structure here, then decided, I actually want to come back up in here. And maybe we want to do some consolidation for a little while, or maybe we even want to make a slightly higher high.
Liquidate that position, man.
You get it?
Stop loss.
It's happened to you many times. Yeah? Has it happened to you? So the point is if we want to increase our win ratio of how many times we win, we need to wait for a confirmation closure below here. And ultimately, this play here is the safest play, because we've now placed our stop above somewhere where if the market goes back above here, it's told us something. It's confirmed that this indication, correction, and continuation is void. See, if we place our stop here, this market could have some sort of news set in. It could come over here and it could decide, So therefore, what have we learned? Well, we're still going to be fuming because we're like, I knew it was coming down from here, but we just placed our stop a little bit too tight. Maybe there's a little bit of manipulation in here that the market wanted to come in here and close and tap into some little imbalance, or maybe there was some news that happened. But it's not going to, if it violates here, it's like you've gone too far.
Sorry, Jay. So I haven't been following closely. So where is your entry after the continuation? So you ignoring the manipulation? I'm on my screen on my phone. So
So what I thank you for asking. So what I'm saying is this: I've noticed that because I've told you guys about our manipulation M and how the market taps back in there, some people are taking break and retest trades. And what I'm trying to say today, as I started, as you wasn't on when I first started, is there's a way in which we can increase our win ratio. Increasing our win ratio is this. Look, this market here is what I started off making sure you understood is, have a look here, indication. Let me make it a different color so we understand where the indication is. Indication indication. All right, now we have got our break of structure manipulation M. Yes. And we can turn around and understand that there's going to be a correction into this level here. This is our correction. Now, I'm saying that if you want to increase your win ratio, because there is a huge benefit of increasing your win ratio, it increases your confidence in your strategy. It increases the fact that every single day you're making more making profits than taking losses. Yeah, and it allows you to understand that, you know what, I'm going to be aiming for 1 to 2, 1 to 3, opposed to aiming for 1 to 10, which is a lot more realistic. But the point I'm making to you is, instead of hitting here, I asked at the start of the session, where's a good entry? And Jivan says here, because he understands the manipulation M and taking the tap in here. But I'm saying this to you: taking your trade after the continuation and that candle closing here with your stop above the swing high, oops, wrong one. With your stop above the swing high is a much more higher probability trade that's going to increase your win ratio. What it may do by placing your stop here is because you would have had your previously you would have had your entry here with your stop here. What that's done is obviously it's increased your risk zone, your stop loss zone, and reduced your lot size. However, it will increase your win ratio. So let me explain to you how you can not only trade like this, but also have big lot sizes. Okay, this must be. I'm telling you now, Jiva, listen to me. I'm giving you the blueprint. All right. I've been testing this, and I'm telling you, what this must be is this must be your first trade. Indication, correction, continuation in an area after taking liquidity. All those things are still in play. In a premium, if you're selling after taking liquidity, but this is your first trade. Okay?
Yeah, I'm following. I'm here.
This trade is supposed to, for argument's sake, go all the way down somewhere here. Like, not looking at the, like, I'm gonna do this now. Let me just select all this. Oops, let me select this, select this, select this, select this, select this, select this, select this. All right, let me grab you and move you somewhere. So I don't want you to get confused, but it's nonsense. All right, you're not stupid. Forget about the candles. Ignore the candles down here, all right? Ignore the candles. Just look at this little drawing that I'm doing. This may be your first trade and your overall target for the day. Yeah, maybe closing that daily imbalance, or could be going and taking a daily low. That's going to be your target for the day. Cool, no problem. Or your bigger target, structure. This is say structure is your bigger target. Now, how you're going to get maybe get more aggressive with this is after the fact, you can take some other plays. Like, for example, when this market starts to come down here, you can take some other entries, when you see the market come back in, and at that point in time, if you want to get another entry, you can start adding to your position. Yeah, and if at that point in time you saw the markets come in there, take a level, tap into a previous battlefield, like here, yeah, and then you started seeing some manipulation plays happening, some energy plays, and you wanted to take another entry, you can do so on your second or third or fourth entry. Why? Because you've got a float. You should be in the green anyway here after this market, after you took an indication, correction, continuation play. You should already have a float. You should already be nice. You should already be up a couple hundred, and now you're adding to a position. Yeah? But when you add to the position, you must ensure that if you take an L on the position, that you will not take an L overall. Okay? So I'm going to say this. For beginners and intermediates, just take one trade at a time. Don't even worry about scaling it. Take an indication, correction, continuation trade. Do it for a week. Do it for 2 weeks and be able to see your win ratio go up. So yes, you saw manipulation M. This becomes another confluence. Yes, it becomes another tick in the box. Like, oh, damn, manipulation M over here, tick. Oh, damn, we're in a premium, tick. Oh, damn, we've got an indication, tick. Oh, damn, we've done a correction, tick. I'm now waiting for the continuation, tick, and I'm placing my stop above the swing high, tick. I want all of these points to have a tick before you take a trade. And then you're going to have more realistic targets aiming for structure. So let's say, for argument's sake, don't look at the candles, just look at these little squiggles that I'm doing here, all right? For argument's sake, the bigger structure, something like this, and maybe you're aiming for this low over here. Look, if I delete some of these scribbles, delete some of these scribbles, maybe you're aiming for that structure here. It's within your daily range, you believe you can get there, fine. But I need you to take these trades based upon indication, correction, continuation. Okay, now what we're going to do is we're going to look at it in a real life. Yeah? In a real life. Okay? Now, we used an example earlier, but it was quite a big example because I was just showing you that these markets are fractal and we, you know, doesn't matter what time frame we look at it, we can still do the same thing. Okay, so let's look at it. For example, we're here. We're going to go back over here where we were. This isn't real time. This is going back a little bit. Hopefully it gives me some data. Okay, let's drop our time frame. All right, so we are in a premium for a start. Boom. Tick 1. In fact, let's list them out. You know, oh, no, I'm just not going to do words. I'm just going to do in sentences, words. Premium or discount. All right, so our first one we need to overstand. Okay. Then we want to make sure, obviously, that we understand
The overall direction.
Yeah, overall direction. All right, overall direction. These are all the things we're gonna have on this list. Previous daily candle energy. Yeah, and what I mean by that is, are we closing the gap or the imbalance from a previous day, or are we just trying to, has it already been closed and we're just pushing up? All right. Then we know that we can't take a trade until liquidity is taken. I probably should have put something in before that also. Have we, I'm going to put the whole words in there. News. Do we know what's going on with news? All right. Once liquidity has been taken, all right, manipulate or legislation. So we're talking about M's, W's. All right. And I know you're not thinking, Ross, a bit of a checklist. Yes, it's a bit of a checklist. Yeah. Then we're waiting for indication or ICC. All right. And then we are placing our stop in the safest place, which you should understand should be above swing heights. Yeah. And then we are targeting, oh no, I'm not going to write a whole, I don't want to write, let's put higher time frame structure as a target. All right, so we've got about nearly 8, 9.
I feel like risk managed should be in there as well.
Oh, for sure. So that's going to make our 10. Let me just try and highlight this. That's going to make 10. Thank you. Yeah, we should definitely have that in there. It's probably a better order.
I was going to question the risk with this strategy. Is the risk the same? Because it is more of a high probability trade. Do we do maybe 0.2 instead of the 0.1?
No. I love your questions. Very strong question. I'm saying this. I want you guys to get into the habit of winning. Yeah. I want you to feel as though every single day you come to the markets, or every single time that you're going to trade, you've got a higher probability of winning than you have losing. Now, most of you have not got that because you haven't been passing your challenges and you haven't been getting funded and clearing money. You haven't told me yet. All right. So if you can do this, even from a smaller perspective, and you did it, let's imagine that you say, you know what, Jay, next week, cool, got some time off work. I'm going to be in this trading team. I'm going to do that for the week. And for the week, you realize, I've actually been winning 7 out of my 10 trades. And I've actually grown my account. Maybe not by the same amount you would have grown if you was getting 1 to 10s. But you rarely get 1 to 10s. Now you're going from rarely getting 1 to 10s to getting 1 to 3s often. I want you to get to the point of doing it often, and then understanding that you don't need 1 to 10s to, like you said, maybe increase your risk a little piece, yeah, or to work with a bigger budget if you're trading your own funds to be profitable. You see, what happens in this trading game is, again, going back to our emotions. Our emotions are, we are impatient. And we're looking at this trading thing, we're thinking, oh my God, I've been trading for time, been coming to these breakfast clubs here for years, and I haven't done this and I haven't done that. And the guy on Instagram said that he's just done this and said that he's just done that. But that's all this energy puts impatience, puts a pressure on us to be impatient. So we want to, instead of risking $100 and making a $400 today, yeah, or making a 1 to 3 or $300 today, because imagine we made a $300 today. In a week, in a 5-day week, we've made $1,500. That's just taking one profitable trade per day and not taking no L's, obviously. Okay. Now that doesn't sound tremendous, but then again, does it not sound tremendous? If you could say, you know what, I'm steadily killing my
That's therefore sounding tremendous. I ain't trying to cut you, but
yeah, why not? Do you get what I'm saying? But the whole point is, I'm telling you, I understand what the pressures are. The pressures are this: you got parking tickets. It's Christmas. You've been here doing Breakfast Club every single day. Jay's just telling you that he just took a trade and he's showing you his trade running up for 18 bills. Yeah. You know, this person on Instagram says that he's got the key strategy, and his key strategy: learn how to bank 20,000 a day with no risk in your sleep whilst you do nothing. And you're thinking to yourself, right, like your whole energy, all the energy around you is about impatience and doing things now. It's the world we live in. I'm in my Amazon Prime. I don't even care about any of the products that don't come to me by tomorrow. Yeah. I'm changing the setting on my Amazon Prime to Prime only. Yeah, I do not want to know about something I'm buying that's going to take a week to get here. I mean a week. By the time I close my eyes and go about my day, the week's going to pass and my item's going to reach. But I'm telling you, and I'm sure you guys are the same way, if you've got Amazon Prime, you just want to know about the things that you can get tomorrow. Because our whole Western world is set up around lack of patience. Getting everything now. Look at the youngsters, the kids, they want everything now. When I was the same time that these kids now talking about Balenciaga and talking about Louis Vuitton and talking about, you know, this, that, and other, me and my dogs were playing Sega Mega Drive. We were just trying to go to the next round whereby you had to go and chase the rings. Yeah, and that's what we was into. Everything's kind of sped up. This desire, the girls want to be women before their time. Do you know what I mean? And the young men are dealing with this kind of masculine energy and adultification at a point when they're still children. Yeah. Coming back to our trading, we want to be the best traders driving a Lamborghini immediately. If this has taken 1 year to learn, 2 years to learn, 3 years to learn, 4 years, it's too long. But yet we've been in school for the last however long, since we was what age? And what did we learn? What did we get out of it at the end? I saw the clip. You might have seen the clip where the woman's asking the basketball player, do you see this year as a failure because you didn't move up to the next, you didn't win the championship? And the guy, he's got a slight accent. I don't know what basketball player is. I'm not really a basketball head like that. He goes, you go to work, right? You go to work and you work all year, right? Do you get a promotion every single year you're at work? Do they promote you every year you're at work and give you an extra 50% on your wage? No. So was your year at work a failure if it means that after that year, the next year you might be getting promoted or whatever it may be? It's not a failure. It's a step in your journey. So I'm saying to you, if you was to clear out £1,500 a week, or you was taking lower risk, higher probability trades, and you was growing your account by $1,500 every week, you are on your journey, yo. Do you think anyone's going to care when you pull up on your brand new Porsche and they say, yo, you're a trader, what's your strategy? And you go, yeah, I kind of just take 1 to 3s. You think man are going to be out here taking the piss out of you? Ha, you take 1 to 3s when you just pulled up on your brand new Porsche that trading paid for. Man are not going to be saying, oh, you only take 1 to 3s. I take 1 to 10s. Well, good for you, buddy. At the bus stop in the rain, I'm in my Lamborghini. I take 1 to 2s and 1 to 3s, and I wait for these till I get all of these 10 ticks in the box before I take a trade. It's about rewiring our brain and understanding that ultimately, what is the goal? And I'm telling you that everybody loses track of the goal because of outside influences. We start thinking to ourselves, nah, this is taking too long. Oh no, I lost money before, I'm not going to do this. Blah, blah. You lose money every day. Every time, look, I got 2 kids. Every time I leave the house, I'm losing money. Daddy, can we go and get this? Okay, cool, boom, that's £50 spent. The other day, their kids just wanted something to eat. They wanted to go to Wagamama's. That was £140 trip to Wagamama's before I put petrol in my car. Every time you leave the house, you lose some money. So you got to think to yourself, where would you prefer to lose money? And let me tell you something to you guys. I'd prefer losing money taking shots at at something I could possibly win at. I don't really want to lose £140 in Wagamamas, because Wagamamas ain't going to give me back £240, or there's no possibility of it giving back £240. Whereas when we take shots in the market, whether you're using your own money or you're taking funded accounts, at least you're giving yourself an opportunity to win. Yeah? So therefore, like I said, if we're in here, let's look at it from a real time. Hopefully it gives us the data. We've come up into a premium. All right, cool. This is a premium. I'm gonna let me recopy this, guys, so that it doesn't move. I'm gonna put it on this one here, T with an anchor. That's me writing with an anchor, so it shouldn't move. Okay, cool. So first and foremost, I'm looking here. The market comes up into here. Let's rewind. Let's rewind this a little piece. And this is just an example. I don't know if we're gonna get egg on my face or not. Doesn't matter to me. This is one of the places that when I drew this earlier, we'd be interested in selling from. One of these places up on this premium line. Okay, cool. So the first one here, premium versus discount. All right, cool. Let's push a little tick in there. All right. Because we're in a premium. She's up in here in this line. Cool, no problem. Now, let's try and I'm going to try my best to zoom down and give us the data. All right. What's this data over here? No, I'm not going to rewind anymore. I'm going to take it as it is. All right. So the market was making higher highs and higher lows and higher highs and higher lows and higher highs on the daily time frame, and we've now made a lower low. Okay. So I'm watching this market and I'm expecting to see a lower high. Okay, I'm expecting to see some sort of lower high. I don't know with what direction we're going in a moment. We was going bullish. Look, we was going bullish, making higher highs and higher lows. But we've come into a premium and something's changed now, and we broke structure over here. So I've got a semi indication that maybe we're going to be going bearish now. But I must first see my correction. All right. I must see my correction back into this energy over here. Okay. And then I want to see my continuation. Now, when I'm saying before about seeing it on a smaller time frame, because we already looked at this on a larger time frame. This is the point. The point is this. At the point when I get my correction into here, I can drop my time frame down and look for the exact same thing. Go through this entire checklist again. Because on a daily time frame, this market hasn't indicated corrected and continued yet. You get it? So on this bigger time frame, this market hasn't done this, and this yet. Okay? But if I was here in this time frame and I've seen it indicate and I've seen it correct, I could try and zoom into here to go back through this checklist again and try and get part of when this market decides to break and start coming down to give me that higher time frame continuation closure down here. Okay, so let's imagine I'm going to try and do that now. I'm going to try my best to do that, and hopefully it gives me the data. I'm going to see how this market was pushing up like so. Oops. Let me get rid of this little line here. That this market was pushing up like this. Okay, within a range, and then I'm going to drop my time frame down. I'm going to try my best. Let's try to see if we go all the way to an hour. Will it give me the hour information? Yes, nicely. All right, and again, I'm going to rewind it a bit. All right, I'm going to rewind it a bit, so because obviously this is actually, let's not even rewind it. It doesn't matter. Cool, we don't have to rewind it. All right, but let's look over here. All right, I'm going to get rid of the session indicator, so we don't have to see all that. All right, cool. So when this market was coming back in here, I was interested in this market. I'll put a line in here, or you can see the line, this yellow line here, below here. Move this out of the way. This yellow area here. Let's make a nice little box. This was the previous structure that market broke. So we broke this. We actually came back into that structure here. So we could have been looking at it here or here. So as it stands, we're here because the market came down here, and this wick, the wick down here first, but it didn't close down here. All right. So when it came back into this level, we're watching it, and at this point in time, we go back through the same checklist. Are we in a premium of this trend? Well, that would be a first tick over here, because we are in a little premium of this trend over here. All right, up into this level, we're in a premium. And then we're looking at this overall direction. We're actually bullish at the moment. There's nothing structurally on an hour time frame anyway. Let me see if I can go down to my 15 minutes. Nice. All right. On a 15-minute time frame here, for us to do structure, maybe here, where when this market came up into here, there's nothing telling us that the market is going to be bearish. It's actually bullish. It's actually been making higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, and a higher high at this wick. You get it? So therefore, I can't get involved in this trade if I want to sell it from this premium. This thing's in the way, boy. Let me anchor this so that I don't keep moving it. Let me put it out of the way and anchor it. I believe I can anchor it by locking it. All right. So at this point in time here, when this market was all the way in the wick here, I don't know what it's going to do. Yes, we are in a premium, number one, but the overall direction is bullish until I start seeing it breaking this structure, making some sort of indication below this structure. Now this wick here, though it's not an indication on the 15-minute time frame, it is an indication on a smaller time frame. I'm not going to drop it because I don't believe it can give me the data. So this becomes a lower low, then this becomes a lower high, yeah? And therefore, it coming, if I'm taking an indication correction continuation play on the 15-minute time frame, I need to see a closure below this level with my stop either above the last high, yeah? With my stop either above the last high or above the swing high. Okay, if I drop my time frame down after I've seen an indication below this structure, which may or may not be here, yeah, let's assume that it's not there, because it's not point me just guessing. All right, let's assume it's not here. But therefore, I'm waiting to see this. If this was the last level of the last low before this highest point over here, okay, well, I want to see something closing below that level. This wick isn't that. So let's imagine that for argument's sake, this is a closure below, and then this is some sort of correction, and then this is some sort of continuation, even if that was your trade here, with your stop above the last high, if you wanted to, or above the swing high, then that is an indication correction continuation play on a smaller time frame that ultimately we believe from the bigger time frame that we should at least be getting down to close below this wick. You see? So though it's on a bigger picture, we believe it should be coming down to close this wick, below this wick. On the bigger picture, when we're looking at it, the reality is we think this market's going to go to hell right now, because we've broken structure indicating below here, corrected up here. We're expecting the market to continue past this level on a bigger picture, but we zoomed in and was able to get a smaller entry based upon the same information. We hope at that point when we saw that get our entry was liquidity taken first. Hopefully there was a tick there. News, there isn't nothing too mad. Hopefully there's a tick there. Manipulation M, let's drop our time frame down and see whether we see our manipulation pattern happening there, etc, etc, etc. Now all of that energy, everything is, we're going back through that checklist to understand Wagwan. Okay. Oops. Now, like I said to you, over here, it's a little, I have to drop my time frame down to be able to get a better entry in here. All right. I'm going to try it and see if we get the information. I'll put a vertical line. I'm just conscious that when it doesn't, it just messes up the whole thing and it makes me start again. So let's go all the way up here to this high. And let's drop our time frame down to a 5-minute time frame. This is the 1st of July at 6 o'clock. Let's put that in our calendar over here. 1st of July at 6 o'clock. Does that say 2014? Yeah, we might not get the data, guys. It's 2014. I just realized how far back we are. I'll try. All right, 1st, the 7th. Yeah, we're more than likely not going to get the data, but we'll see. Okay, we'll see. Let's try and drop down here to a 5-minute time frame, see what happens. Go back through our calendar to that date. All right, cool. All right, no problems. All right, we're there. All right, so we can see here that the market I put a little bit of structure in here. You see how where this market couldn't break it, couldn't break it, couldn't break it. Even here, this little wick actually wasn't a closure, as I thought. On the 5-minute time frame, this wasn't a closure. So realistically, I want to see I really wanted to see a closure below here. I just got a wick below here. So now we're zoomed in more, say, this is exactly the same, to be fair. We had a closure here, indication here. We had a correction. Look how this market didn't close below as such. This gave us some wick action in here. All right. So we've seen the market come up here, correct. And the first little closure we can see is about here. All right. Aggressive entry will be above this last high. Safer entry will be above a swing high. All right. We can test this out as much as we want, but remember the difference is going to be our risk to reward. However, our win ratio is going to have a higher probability of having a higher win ratio when we place our stops above swing highs. All right. And as we can see, this was a profitable trade, whether it was our aggressive entry like this or our safer entry. Now, if you had your safer entry and then that market got down to that target, let's have a look what that target was over here. That's a 1 to 5 trade. It's not a bad trade. Look, it's not a bad trade if we hit that market getting down here. It's not a bad trade. It's a great trade. Now, how long it may take and whether you're going to be in that trade for that length of time, etc., is another conversation. Yeah, but the reality is that market getting down here, it's taking long. Let's go to our daily. It's going to take some days. It took a while. Let's have a look at how long it took anyway from up here to get all the way down here. This is over a 2-week trade, to be fair. That more than likely none of us would be in a 2-week trade. We would have been in a smaller entry position here, taking a structure until the end of the day. But even if that you took that trade above the last high, okay, and you took it down for 1 to 5, 1 to 3, is a tremendous trade. Let me stop this, it's going mad. It's a tremendous trade. Now let's skirt forward to present time. All right, we still got our little indicator, our little checklist over here, which could be in a better order. You know, first and foremost order. Our news will be higher up in that list. Okay, now let's zoom out and see what's going on. Now this is what's going on right now for our Euro USD, and Euro USD isn't even one I had my eyes on this morning. Let me see if it is or isn't. Yeah, it isn't actually one I had my eyes on this morning. Okay, but let's put some lines in. So these lines are telling us, are helping us with our checklist. I'm gonna delete everything. I'm gonna delete all of these little yellow things over here, distracting us. All right, cool. So we're in a premium. Check. All right. Overall direction, we need to drop our time frame down and see what's going on. Well, the overall direction is out of the premium. We are bearish. All right. We are bearish out of our premium. Have a look. Because from our premium area, the market has been coming down like this. This is our checklist. All right. The market's been coming down like this. We're in a premium. All right. On a daily time frame, let's have a look and see what happened yesterday. Yesterday, the market's ramping. Came down to a discount over here of this range, even though the range is drawn very badly. But we've started to ramp a little piece. Can you see it? Just ramping, kind of like we're making lower lows here, but we came back up here, kind of equalish, kind of high, and we just kind of made a higher low. We're ramping a bit at the bottom in the discount. So maybe we're going to see a little push retracement come back into this energy. It's very possible. Very possible this market's going to push up into these levels here. And for that reason, automatically, I'm looking for a sell in this market. I would be looking for a sell. This is my ideal trade, to look for a sell from in and around this premium. This is why I've got this checklist. Anything outside, deviating outside of this, is not a high probability trade. Okay? So even if we go down here, yes, we're able to take trades based upon our understanding of liquidity, our understanding of what the markets may do. Look, if I put my the ICT session indicator back on, okay, we'd be able to say, okay, liquidity has been taken from here, from there, and the market might be trying to push up into this level. Yes, we could do. All right. But on our daily time frame, we go back to our daily time frame. What is this market doing? Let me draw some lines in to make it, to point it out to you. This market is bearish on a daily time frame. Here's the daily structure. Here's the last high. Prior to that, we've had a high here. We had a high, low. Let me do it with the dots. It's easy with the dots. Okay. Boom. Let me make it a color that we can see. boom, 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 boom. Nothing in this market right now is telling you from a daily perspective that we should be buying it, because we're trading within this dot and this dot. We haven't broken that daily structure. On a smaller time frame, yes, maybe there's some opportunities, because on a smaller time frame, which is the 4 hour now we can see some within this leg here. So within this white dot here, which I'm going to now make yellow, and within this white dot here, which I'm going to now make yellow, we can see some smaller 4 hour structure. Have a look. Boom. Boom. It's a bit difficult in here. Boom. 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 Yeah, we can see some smaller little energy in here. That maybe this here, look, is a break of 4 hour structure. And then this, therefore, is a higher low. And therefore, we're expecting to see a higher high, which we have seen. So if we was in here, we might be saying on a 4 hour time frame, this market has made higher highs, higher lows, and higher highs. So therefore, it's bullish. But here is the wall. That yellow dot is the wall it has to break to say that it's going to break this structure and do something different. So when this market comes back down in here, because we're currently trading within this low and this high, let me make it a different color so you know what I'm talking about. That white line and that chubby white line here, we're currently trading within this box. And if we're making higher highs and higher lows and higher highs, the overall energy is that, yes, the market from here is going to do this. Especially if we can see from the bigger range that the market was down in a discount. This is the overall energy. So I could set myself up to say I'm looking for a buy in this market. I could be like, yeah, I'm looking for an opportunity. The market came down here, made a low, made a higher high, made a higher low, made a higher high. I'd like to see this market come down and either make a higher low for me to get in here for the buy, or to get into some sort of continuation of this market pushing up. I could do that. But this, like I said to you, I'd prefer to be doing all of this with all the ticks in the boxes up here and this market to be up here, and I'm telling you that it's in a premium, it's going bearish, I'm looking for a sell. The last candle was a red candle. Yeah, so look, let me answer these questions in an ideal scenario. An ideal scenario is we're in a premium, so the market's up here on a smaller time frame. The overall direction is the market started to do this, bearish, tick in that box. The previous daily candle was a big red candle, tick in that box. The liquidity is taken. That when I woke up in the morning, I saw that this market pushed up and took Asian session highs, took the liquidity above. The news is not giving me any mad news to worry about. As it came up in here and took the liquidity above in this smaller session, it made a lovely manipulation M like this. And then I waited for the indication, correction, and continuation. And then I placed my stop above a swing high. Yeah, maybe above that swing high if I'm happy with it being a 4 hour swing high, or whatever it may be. Or if I wanted to go all the way over here, depending on how big that lot size is, it depends. Yeah. And then I look for the higher time frame structure as where I'm taking this trade to. I'm saying, okay, I've got this trade in here, lovely entry over here, and I'm taking it to this lovely point of structure that I can see left over here for a lovely 1 to 5 trade. And I've managed my risk, so if it goes wrong, I'm only losing within my risk. This is what I would prefer. Ticks, 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 ticks in all these boxes. That would be a 10 out of 10. Now, could I potentially be down here and be able to get in as trade? Yes, because I can get ticks in these boxes, but based upon smaller time frame energy, i.e., we are trading within this white line over here, which now dream is here, and here, if I can remember correctly. Yeah, if I'm looking at a 4 hour time frame. Yeah, we're trading within probably like this low here. Bear with me so you can see it. If you can't see it, it's like this, coming from here to here, to here, to here, to here, to here, to here, to here. Yeah. So the market's currently trading within this high and this low here. We've broken structure here. We've actually indicated here below this level of structure on a 4 hour time frame. Okay, we've actually indicated here. Okay, if we drop our time frame down to an hour, that wick is going to look like more solid candles. You see? So if I was to draw some lines in, the lines would look like this, touching that last low before this highest point of this market pushing up in here. And we've actually seen this market indicate below this structure. So maybe the same breath, now I'm correcting myself, on a smaller time frame, on this small, though overall we might see this, but now on a smaller time frame, this looks like an opportunity because the market is indicated below structure. It's made a retracement, which is approximately about 50% of this push down here. And maybe now, as I'm looking at on a smaller time frame, liquidity in this London session has just been taken from above. So maybe the short-term play for a day trader is this market coming down here first, to the point where it could possibly, if it isn't finished, have a look. This push was up in here, boom, indicated. We've seen a structure breaking. Is it the case that this market wants to retrace back down to 50% of this push? All right, so 50% of this push here. Well, to be fair, the market did retrace to 50% of it. So I'm going to discount that. I'm going to say, okay, it's already done this for 50%. What do I mean by that? Let me draw it in on top. This was a push from this level here. This was a retracement to 50% of this push. So maybe the market wants to now push back up, back into a premium. All right. But all of this smaller energy at the moment, we still have to take into consideration, because we can't just say, yeah, okay, we're buying, we're selling. We still have to see what we need to see. And at the moment, we can see how the market has pushed down here, made a 50% retracement of this retracement leg, that the market may be deciding that it wants to come down here first before continuing to push up. All right. So this is me showing you before we just looked at it in a much bigger picture. We're looking on the weekly time frame. As we zoom in, these constant questions, these 10 questions are constantly being asked. Now, in this little impulse here, we are in a premium of this smaller impulse. So therefore, it's a smaller impulse. It's a smaller potential target. It's a smaller potential lot size. It's a smaller potential time frame. We are in a premium of this little impulse here. Let me show you what it is. Let me get rid of this. Let me make these lines a color that stands out. We are in a premium of that little yellow range. And as we can see here, next on the list, the overall direction the market was making higher high, higher low, made a little bit of a, we're in this area here, wicked above this higher high. So on a smaller time frame, we figure to ourselves, okay, the market is still bullish, but are we potentially getting, what's next? Liquidity being taken. We need to drop our time frame, have a look what that liquidity has been taken. Because the Asian session was here, the market's pushed up, taken liquidity from above New York session and above a previous New York session, and then made a lower low. Okay, it's made a lower low here. This market here, wicking down here, has broken past this little structure in here. Now we don't know whether this is just a wick grabbing liquidity or whether this is a break. Now you're someone saying, but Jay, it didn't close down here. It didn't close down in the 15-minute time frame. But if I drop my time frame down, have a look. We're not quite on the 5-minute time frame, but we could go even smaller. Let's just say, oh wait, we can even say, let's just stick with that. On a 5-minute time frame, we haven't closed below here, but the fact that we've wicked down here is showing that potentially those, we wicked down here, we pushed out. We don't know whether or not on a smaller time frame, like if I go to my 1 minute, we can see a closure below here. So is it the case that this is an indication on a 1 minute time frame? It is breaking below here, but we don't know because of this a wick on a larger time frame, whether it's just, dipped his toe in and gonna start going back up here. Hence the reason why I said we are going to be waiting for the correction and continuation play. So on a 1 minute time frame, I'd be waiting for a closure below here. On a 5-minute time frame, I'd be waiting for a closure below here and then a correction and continuation on a 5-minute time frame. So I may not be able to, where I could get in on a 1 minute time frame entry may not be the same for a 5-minute entry. Hence the reason why when I talk to you and I say to you, you guys are looking, we're waiting for a candle close, and you hear me say, check down here to see if you've got any synergy in time. Meaning that if there is a 1 minute closure right now at 9:17, there's no synergy in the time frame, is there? Whereas if it was a closure at 9:25, after it already pushing down here, and then we've seen a closure, that's not only a 1 minute closure, it's also a 5-minute closure. Do you understand what I'm saying? Which gives you that extra confirmation, because you know that when you scoot out to the 5-minute time frame, you've now got a clear indication on a 5-minute time frame of what it wants to do. So once you place your stop above that last high, you see how it's giving you information, it's giving you a clue. If we got a 5-minute closure here and we thought that was an indication, well, we're not expecting it to come back above this last high. So your stop loss, on the basis that we got a 5-minute closure here, we might have got an indication correction continuation on a 1-minute time frame. Yes, and that was the reason why you hit the button. But from a 5-minute perspective, because we've got a 5-minute indication, you're not expecting your 5-minute correction to break this last high. And that's how I'm able to say to you, I've taken an aggressive entry instead of going here. Of course, here is the safer place. Here's like saying, you know what, I'm not leaving nothing to chance, because maybe that was a 15-minute closure and the 15-minute correction is going to come all the way past that 5-minute high before doing this. Do you get what I'm saying? Like, we don't know what time frames being respected, but we can use these time frames for guides and understanding. For example, right now, there has not been a 15-minute closure below this structure here, this little bit of, structure in here. If I go to my 5-minute time frame, there has not been a 5-minute closure below this structure over here. There has been a 5-minute closure, however. Below this smaller 5-minute structure, because this is actually the last low before this highest wick. There has been a 5-minute closure in here. Maybe you're gonna wing it here. It's not very clean. Yeah, here. Yeah, but like I said to you, when you're looking at this, and if you want to take higher probability trades, you want it to be definitively like closures. You want to see a lovely closure here, lovely closure here, lovely closure here, then you're getting in. If you don't want to improve your win ratio, by all means, you can continue to take trades on a volley. You can continue to take trades when it doesn't quite look like a closure. You can do that. It's down to you. I can't dictate what you do. I'm just telling you this. You're going to feel a lot better trader if you've been taking trades all week and they've been 1 to 3s, yeah, but you've been winning more than you've been losing. Your confidence is going to come up, yeah, and you've been doing all of these things on the list, yeah, and I believe it's better for newbie traders to get their confidence. You see me, if I take I could have a 100k account and take it all the way down to 92k prop firm account and still have the confidence that I can get myself out of that situation. Yeah, I'm not saying that's a good situation to be in. It is not. But I'm saying to you, I still have the confidence. But as a newbie trader that hasn't experienced wins and payouts and whatever it may be, you can get to the point where you're like, oh, this is just nonsense. And you start straying, looking at other strategies and blah, blah, blah. So a win ratio is good for your soul, getting up a higher win ratio. And at that point in time, you won't care so much that you didn't take a 1 to 10. You will just be feeling good at the end of the day that you took $1,000 to $1,300, because you're going to ask your brethren how was work and he's going to say it's rubbish, and he didn't make $300 today after working for 12 hours or 8 hours, however long he worked for. So win ratio is important, and I've just illustrated with this whole session how we can increase our win ratio. We're going to take extra confirmations, indication, corrections, continuations. We're going to try and tick off everything off this list. Even if we're looking at it on a smaller time frame, we want to tick off everything on this risk list. You can't be out here saying, yeah, I'm going to take this trade, but you're not in a premium or a discount. If you're not in a premium or a discount, why are you buying or selling? Leave that market alone. If you don't know the overall direction, you're just winging it, leave that market alone. If the previous daily candle is doing against what you're saying, for example, there's a big, let's look at the one I identified. Look, I identified, let's have a look at JER 30 for argument's sake. Okay, so on JER 30 on the daily time frame here, I identified that this was the previous, this candle opened here, this green candle here, and therefore from where it opened over here, everything below here was in balance. All of this is in balance. Okay, and this is the previous high of the previous candle. All right, so that means when this candle opens, let's look at this. This is Thursday. Let's go back to Wednesday. I'm gonna go back one candle. Okay, and I'm going to drop my time frame all the way down to 50 minutes. Can you see here? It says Wednesday. It says Wednesday. This is Wednesday New York session. All right, cool. I'm going to play it forward. It's now here becomes Thursday. All right, and we can see the market consolidating. Asian session. All right, let's play it forward some more. Now I've identified that the market opened here. Look, this is about midnight, around about here. That's where it says previous open. Okay, and this is the previous high from yesterday, the wick that went over here. Okay, this is where the candle open, right? So I understand that this market could, even if it wants to be a green candle, could push down here and close in balance. Yeah. But ultimately, the energy is that maybe it wants to be another green candle. It has dreams of being another big green candle like its cousin the day before. All right. So I'm now go down to my another point on the list. Let's get our points on the list, which is what market was I drawing it on? Was it EJ? What market did I just write all that stuff on? Was it EJ? No, it was EU, right? We were just talking about EU. That's
yeah, Euro USD.
It was Euro USD. Cool. Let's grab this, highlight, copy it, and let's go back to our thing. So we're here once again, and we're looking at this list. Okay. All right. So this morning is now kicked in. All right. So this is the day started over here somewhere. The market's just been trading, going sideways and consolidating. All right. Let's click through. Now we are looking at this list. There's some issues here because we've got to look at whether JER 30 is in a premium or a discount. Now the reality is JER 30 has been going to space. Okay, it has been going to space. That if we start drawing our lines in like so, the market has been pushing up like this within a range like so. And we're kind of in the middle of that range. As much as we've just been going green, we're kind of in the middle of that range, which I really don't love. And I also don't love the fact that there's no more information for me to get looking backwards on. There's no more information historically. All right, so we've already deleted some of these things here. So again, it's not great, okay? But let's get down to that previous daily candle, where we know was a big green candle, which is the reason why it's marked green in here. And has liquidity been taken? Because if liquidity has been taken from above, I'm thinking to myself, maybe the market wants to come and close up the imbalance that from the previous big old green candle, or maybe the momentum is just so colossal that this market is just going to keep pushing up. Either way, let's have a look. So this is Asian session over here. Asian session was here. Okay, now have a look. Let's look. Remember, this candle has dreams of being a big green candle. That's what its dreams are. Because its cousin yesterday was a big green candle, so it believes it can be a big green candle. So when London session kicks in and I see this scenario happening, of it taking liquidity from below, I know there's imbalance below. But I also understand that today's candle has dreams of being a big green candle. That's its dreams. So when I see that this market came down here and liquidity's been taken here, I'm looking for an excuse to get into this trade. Now in this instance here, if we're looking at it from a 5-minute perspective of 5-minute structure, well, here is the swing high. Now I can see smaller structure in here. You can see it also, but it'll be clearer if I drop my time frame down. Two scenarios. We are either waiting to see an indication correction continuation above this level here before we get in, or we're going to drop our time frame down, which is fine because we understand how to do so. And we're looking for indication continuation above these structures. Look at the structure now. Now you can see it a bit clearer. Yeah? Let me put my dots in. It's easier with dots instead of the lines. Can we see this? Or is this just my eye that can see this structure? Is it just my eye, or can you also see this structure? I'm hoping that you can also see this structure. All right? And I'm saying to you, if we saw this market here being taken out, have a look at it now. Look, we're going to our next one. Do we see any manipulation M's or W's? Well, there's one in here, right at the bottom after liquidity has been taken. Let me see on the 1-minute time frame. Let me see on the 1-minute time frame. It's not as pretty on the 1-minute time frame, but it doesn't matter because it still gives us 1-minute structure. Because on the 1-minute time frame, this is the last high before the lowest point. And then therefore we're waiting for what? What are we waiting for a high probability trade? What I've been talking about all this morning. Let's see. Let's let it all come together. What are we waiting for a high probability trade after we've got these ticks in the box? We've seen this market break structure. It's breaking structure. So therefore it's done what? What is this leg? Above this white line, what has it done? What do we call this? What do we call this break above this last high after it's just taken liquidity from here? What is this? What is this push here, guys? You guys have seen the meme, innit? Free. If Danny had 3 apples and he added 1 apple, how many apples does he have? Yeah. What is this push here above this structure? Above this little high here? This is our indication.
Or continuation.
This is our indication above this level here, breaking this structure here. This would be our correction, and therefore we're waiting for a closure back above, and we're in a position whereby we can either enter that trade here with our stop below the wick of the last low. Here's the wick of that last low here. This is an aggressive entry trade, yeah. Or alternatively, we're going to say, no, Dre, I ain't got that patience to get stopped out and get back in. We're going to enter the trade in the same place after an indication, correction, and oops, let me move this here. This is the candle that closed above. Okay. Or I'm going to enter that trade and place my stop above the swing low over here because I ain't got time for all that nonsense. Either way, that's how we can take trades with higher probability rates, by getting that indication, correction, continuation. Not on the volley. We don't have to hit on the volley. We're not break and retest traders, which I've noticed some of you might be slipping into and taking lots of losses. That's it. And then where are we looking for structure for where we're going to potentially get out? We're going to go to a higher time frame. We're going to get out of 1 minute, get to a higher time frame. Now, for argument's sake, let's say, okay, this is a 15-minute structure. Well, look, mate. This level in here is going to be a target. That level in there, what I just put in here, this bright blue, is going to be a target. Yeah? Because if we think this market's going to continue pushing up, this is going to be a target. It's also a previous day high. Yeah, it's also the previous day high. And as we can see, we have obliterated that target. And there would be nothing wrong if you told me that you either stopped yourself out there for a 1 to 4, 1 to 5 trade, and that was on your lower risk one, I believe. Yeah, that's actually your lower risk one. So your higher risk trade is going to be bigger than that. Or you move your stop loss all the way up here and you're just riding the rest. Remember, 1 to 3, you're taking 50% partials anyway. Yeah, but either way, this trade here went for a lovely, at this point in time, that's 1 to 4, and it's currently pushed all the way up in here for 1 to 5.6. Let me see where it's gone, if it's gone anywhere else. Yeah, this is where we are right now, current time. Yeah, so understand that high probability trades is what you're going for. All right, and you need to see, and more important, if I could focus on a few points here, it's ICC and it's risk management, yeah, and it's after liquidity has been taken for day traders. That's going to improve your risk rates significantly. And if you don't believe me, backtest it. Backtest it on whatever time frame you want to look at. Look, I'm going to delete everything. Boom. Backtest it on whatever time frame you want to look at. And you're going to look, I'm just scooting back, for example, here. And you're going to see this here. This is the focus. I'm just scooting back. This isn't what I made earlier. You're going to say, okay, this is me. I woke up, what day was this? Tuesday, the 3rd of December. And first of all, I saw here liquidity being taken by this little wick coming down here. Yeah, let's drop our time frame down and have a look. Let me see if it will drop our time frame down. I'm just going to drop it straight away so I can just get straight into it. So I'm looking for that circle. Here you go. After that liquidity has been taken, have a look here. You're saying you're waiting for what? This is the structure. This is the last high. Yeah. If you really want to even go there, this here is the swing high of this little push. But there is smaller structure in here also. smaller structure in here. You're waiting for an indication. Even if you say I'm going for an indication over this high, which is the swing high, that was the indication. This was the correction. That candle's the continuation. That could have been your trade. Like so. You stop aggressively below the last swing low, which is here, or below here. That could have been your trade. If you're looking on a smaller time frame here, this was the indication above this structure here. This was the indication. This was the correction. This was the continuation. And in this instance here, boom, your safer stop keeps you in the trade. Your aggressive stop below this last swing low gets you stopped out, is what it is, because you didn't take major structure break. If I was thinking to myself that I'd be thinking to myself that if you're not going to take, this is only in a 1 minute time frame, so all these little notches in between here is like 30 seconds. So if you're not going to take at least this 1 minute structure here, a clear swing high, then you're going to have to take the bigger zone. There's no point going here on the basis of some 30-second structure that was broken over here. Okay, so either way, whether you taking the entry here or whether you took the entry over here, so that's one, or you took the entry after here, after this being your indication, let me draw it in for you, after this being your this being your indication, this being your correction, and this candle closing here being your continuation, either way you're in a position whereby your win ratio, have a look, starts to go up, starts to go up. Where are you targeting? You're zooming out of the time frame, going to higher time frame, and you're looking for, where are we, structure. So higher time frame structure from getting into this trade first and foremost would have been this wick high here from Asian session highs. Would be a point of structure. All right, but let's see if we can go back. Is there any more history? So the problem with this in regards to seeing where your target's going to be is that we've got no data. We've got no historical data here. All of this energy is all-time highs, which is a bit of a problem. All right, it's a bit of a problem because you can't look left and say that's where you're targeting. What you can do is you could track this trade on a smaller time frame. As soon as the market gives you an indication, correction, continuation against you, you get out. All right, so look at it even if I go to a 1 minute time frame and use in this trade and it's doing tremendous things, you're going to get out when it indicates, when it corrects, and when it continues against you, which would have allowed you to at least, let's have a look. Let's try and make it realistic. I hate when I see educators just making some stuff up. Would have allowed you at least to get your trade up to, have your stop being around here. But prior to that, we would have already taken your 1 to 3s. Yeah, we'd already taken 50% of the table. It would have already been risk-free. But maybe at this point in time when we're seeing this market potentially breaking this little minor structure, corrected and continuing, maybe you would have been out. Okay, in this instance, you would have been out. Okay, but what I'm saying to you is I want you guys to learn how to get your win ratio up. And how you get your win ratio up is by taking higher probability trades. Not hitting on the volley, not placing your stop too tight, and not understanding where it's marked. And if you're looking for your peers and you can't see that they're in a premium, you can't see that they're in a discount, you can't see that, well then they're not on the cards for you to take the trade today. They're not a goer. They're not a goer. Let's have a quick look at GBP NZD. We have run on. Let's look at GBP NZD for argument's sake. I don't like immediately looking at this from a bigger picture, much bigger picture, as I don't like the way we are in the market. Yeah, that's just me generally. Yeah, where we are in the market. I'll still look at it anyway because I marked it on a daily time frame. Yesterday's candle was a big green bullish candle. Look, see, I've identified that imbalance between where the next candle opened, yeah, and the previous wick. This is all imbalance. I'm also identifying, where that candle opened, had a little jump. I'm identifying the previous wick high over here. So my immediate energy is that this candle has dreams of being another big green candle. However, it may push down in here at least 50% of this imbalance first before becoming a big green candle. That's what my brain's already saying to me. Yeah, and then I want to drop down my time frame and start going through my list, understanding where we are, looking at, okay, this is the session energy in here, this is Asian session energy in here, and potentially it looks like within London session we may be trying to come up here and take Asian session liquidity. Does that mean that maybe this market wants to do this? Yeah, before maybe pushing down in here to close up some of this liquidity? Yeah, to maybe then become a nice big green candle and take previous highs? Or am I thinking to myself, okay, maybe because look at this market here, that this candle already, look, this is where it started off, this is where it opened. It opened about here. See where this little line is, sorry, where it says previous open over here. All right, this is kind of where the market's closed for like 11 o'clock. All right, around here. And then the market maybe already started pushing down into that imbalance here to 50%, because this, you might as well say, is 50% of this gray box. And maybe now its whole energy after it comes up here may just be, it's either that it comes and takes the liquidity from down here and pushes up, or maybe the market wants to just continue making indication, correction, and continuation and pushing up to try and become that big green candle it dreams about. See, this is how it colors my trades. Yeah. And therefore I've got to look on my checklist and see, you know, is it in a premium? Is it in a discount? That's why when I haven't got all the ticks, i.e. the very first thing I said to you about, I don't really love the fact that this market's kind of in the middle, is the reason why it gives that question mark of, does it want to actually go up and be a nice big green candle? Or does it actually want to come down and be a red candle? Because it's in the middle of a range. It's kind of in the middle of a range. You know, I'd like to see it further up in here. Like if we was up here, I'd be like, yeah, we're overbought. We're well up in this premium. We're up. I'll be really looking for the sell. Let's try and quickly see that before we finish up, because we've been doing good education today. So let me try and see if we can finally see that energy over here. You know, I would have been here looking at this figure to myself, okay, yes, we want to understand on the bigger picture what the market's been doing. The market has been bullish-ish. Let's have a look at it in a larger time frame. Yeah. The market was coming down here from in this kind of energy like so. You know, even if you want to go and take these little levels in here, on a much bigger picture, it was doing this, making some lower lows, lower highs, lower lows. Yeah. But we're currently got this lower high and the market's kind of trading within here. We're up into this premium level in here, and I'm a bit concerned that we're in a premium of this bigger range. Then I drop my time frame down. On a smaller time frame, we're also in a premium of this impulse in here. You understand what I'm saying? So I'm saying, okay, we're in another bit of a premium in here. I'm thinking to myself, okay, no problem. I'm dropping my time frame down smaller yet again to see what's going on. I'm on a 4-hour time frame. The market's been very, very bullish. Okay, I'll be able to draw in some lines in here if I wanted to. Have a look at this line, brrr, like so. Where do I want to touch? I really want to touch this last little energy here, last low before this highest point. Okay, you know, even though, you know, something like this, I want to try and capture all the energy of these data points. Okay, and then I'm looking at this on a 4-hour time frame. I'm thinking to myself, okay, the market on a 4-hour time frame is indicated and broke some structure in here. Okay, let me drop my time frame down further. All right, I am concerned that this market came and didn't close here on a 1-hour time frame, but closed down here, that we might retrace back into these levels before coming down. I am concerned about that, but I want to trade what I see at the moment from a daily candle perspective. It's a big red outside candle. Okay, but I am concerned that there is this imbalance that opened up here that the market might want to come and close. All right, that's what I'm concerned about. So when I'm looking here in a smaller time frame and I can see all these little doji, we're not too sure, we're having an argument about what's going on, I'm thinking to myself that there's a very, very high probability that this market wants to kick back. Yeah, even if it's just to close this red candle imbalance, there's a high probability this market wants to kick back in here, and therefore, what day is this? Tuesday. Let me try and scoot it. Try and go forwards a little bit to the next day. Where's the next day? Where's the next day? There's Asian session now. Yeah. So in Asian session here, we've seen it close up that previous imbalance, because that was the grey box I've drawn in here. We're sleeping at this point in time. We've seen a lot of activity in the Asian session, GBP and ZD. And I'd be waiting here to see what happens. Okay, we've seen the market push down below here. This is the London session. The market's pushed down below here. I'm still concerned. Let's look at it on a larger time frame, 4-hour time frame. And I'm trying to see this. So from a 4-hour perspective, I now believe that this indicated that this wick up here was a correction. See it? I was concerned before this wick happened in Asian session. I was like, yeah, we broke this structure over here. I'm waiting for the retracement. The retracement happened very quickly. Bang! Back up into a previous battlefield, and bang! Coming back down in here. So I'm thinking to myself, potentially, that market's done its retracement. This is what I'm thinking. I might get egg on my face. I'm doing this live. Yeah? I'm thinking to myself that market's already done its retracement, and maybe we might just be seeing some more bearish energy coming out of this market doing certain things. Let's have a look at it on a 1-hour time frame. Yeah, now we're down in a discount, so we might see the market push down a little bit more, but then trickle over here. So I'm a little bit concerned. Either way, we're just taking Asian session liquidity. So on a smaller time frame, let me see what's happening on a 15-minute. I'm on a 5-minute. Let's have a look. Remember about our high probability setups is that we're waiting for indication, correction, and continuation. So if I put some lines in here on a 5-minute time frame, this is the last bit of structure. Okay, on a smaller time frame, maybe there's something else going in here. Let's play it forwards a bit. We've definitely seen a indication of what the market wants to do, breaking above these levels. Okay, let's have a look at something real quick on a smaller time frame here. On a 1-minute time frame, when that liquidity was taken from here. If I was to look at structure, again, this would still be the high. This would still be the last bit of structure if I'm looking for high probability setups. And the market bursts through there really emphatically. So this would be all indication. This whole energy here is this indication. I'm waiting for correction and then a continuation if I believe that the market's going to be bullish here. All right. So I'm clicking forwards, clicking forwards, clicking forwards. All right. I've seen the market coming back down, correction all the way back down to the previous battlefield of where it broke structure over here. And I'm wondering what's happening. I'm watching it. It's come down to a previous battlefield. We're watching it. So at the moment, we haven't got this was just indication. All this energy here was correction. And I'm still not in the trade. Yeah? Where would I be trading it from? Where would I be doing? Buying or selling it right now? Who knows? Yeah, even though we're like, oh, it's the market's moved and done this and candles are appearing, doesn't mean that we should be in the trade. Let's see what happens. Now, if we wanted to, at the point of this previous battlefield, we could start again and start saying, okay, we're waiting for indication, we're waiting for indication, correction, continuation above some sort of structure. The last low, high before the lowest point was this one. And we're waiting for indication, correction, continuation. If it was very aggressive, we could say we're getting in here. This is the most aggressive entries below this low here. I'm going to put them all in. All right. That will be one. Another one would be below this low and below the previous battlefield. And another one would be us waiting for that closure above here. Because remember what I said, this was just indication. All this energy here is correction. On a smaller aggressive entry, maybe it came into a previous battlefield and we've seen a small break of this minor structure. And they said there's one more entry. The one more entry is that we've just broken this more significant level, indication. So we're going to wait for a correction and continuation. Let's play it forward and see if we get it. Okay, and then that could have been another entry. These are all entries that have an edge, like we're not just guessing about them. There's a reason why we're taking it. All right. The reason why we're taking this one here, this last one, is because this was the structure. This was the last significant structure here. This was an indication that we want to go up. This was a correction that didn't break the previous structure, and this was a continuation. So therefore, if we do take that trade, our stop has to be below here. If we took a previous trade that was over here very aggressively here, our stop would have had to be below this low, and on that little push down here, we possibly would have got taken out of that one. But on this one that we said we was taking the same trade, but with our stop below this low, previous battlefield, which is the more sensible trade, below this swing low, because it's in the middle of nowhere, because it's our previous battlefield. This is a more sensible trade. This is a very aggressive trade. Get rid of that one. All right. We've seen how that one's markets come back in, put us in the red. And now we've got a confirmation above this level of structure, indication, correction, continuation, and from on a smaller perspective of a smaller indication, correction, continuation to get to that trade. Let's see what happens. I still might get egg on my face. Who knows? Who knows? Let's make it faster because I ain't got all week. Watching it. Both of these trades are taking it L. All right. Both of these smaller aggressive entries are taking it L. All right. Which is fine. Okay. And the reason why it's fine is, like I said to you, we had a reaction after taking the liquidity already. The reaction was from down here. Boom. All right. So ultimately, we're waiting for an indication, correction, continuation above that level, which we haven't got. We was trying to take the trade a bit aggressively within that range, and we haven't got that yet. So let's imagine we do take an L there. No problem. We're taking an L. 1 L for the day. All right. If we believe that this market is going to be bullish from here, if that's what we believe on a larger time frame, that the market is going to be pushing up from here to try and get into a premium, then that's what we'd be looking for the trade to break that structure. But the issue is the market is being indicated, corrected, continuing bearishly, and we was just trying to see whether or not we could get into a premium of that trend. You get it? We actually want to be in here for the sell. We was trying to see if we can get a premium of this trend, which still might happen. But remember, when it happens, it could happen sideways. It could kind of happen like this. It doesn't have to be like, whoa, boom, that happened. Because ultimately, this market is pushing in the opposite direction. We're actually looking for a sell. We actually want to see liquidity taken from above to get in for a sell. However, the way I've just been opened up this chart is that we happen to be at a place where liquidity was getting taken from below. So we was looking at it based upon, okay, liquidity is taken from below, what would we be doing? Well, liquidity was taken from below here, this level here. And ultimately, if we're saying that we're thinking that this market might push back up into a premium, this area where this liquidity was taken from is really our stop supposed to be below here. All of that trying to get in here. When remember, overall, we want to be in for the sell. We're hoping that liquidity can be taken from this level here and at least come and take Asian session up in here, back up into some like maybe 50% of previous Asian session or to imbalance. But ultimately, we want to be in here for the sell. Why? Because of our checklist. All right. And sometimes you can get lost. Even just a minute ago now, I was getting lost in trying to look for the buy. But overall, we're really thinking to ourselves that really we should be trying to get into this market here for the sell. Okay. Let's play it forward and see what happens anyway. All right. See what happens. The market, we can see how the market came. This was our indicated here, took liquidity here and had a reaction. It didn't not have a reaction. Liquidity was taken from here. We had a reaction. All right, but not enough of a reaction for us to be able to, on a larger time frame, for example, at a 5 minute, to say that we got an entry. So at the point when this market had stopped here, from about 50% of this impulse, have a look at the impulse from here to down here, the market tapped into 50% of that impulse. At that point in time is really when we should be looking for our indication, correction, continuation in the opposite direction. And on the 5 minute time frame, here it is. This is some levels of structure. As the market came up into this 50% level, we're seeing markets indicate, we see markets correct, we see markets continue. Yeah, because the point is that we want to be in here for the sell. Yeah, we want to be in here for the sell, and we've seen the market come in here and tap in. Look, we had a reaction from the liquidity being taken. That reaction took us all the way to 50% of the impulse. At the point that we don't see this market correct and then continue higher, well, then that energy's gone. Yeah, so market came down here, corrected, even tricked us into thinking it was going to push up here on a smaller time frame, but did not break this structure and started to break this structure below here, i.e. indicate, correct, continue, You could have then now gotten into the trade where you wanted to, in the direction you wanted to, not from the place that you wanted to, not from the location. From a location perspective, I'd like to be in this trade from up against this yellow line. But based upon a day trading strategy, you could have been in this trade here for a sell. And where are you going? You're targeting higher time frame structure. It's easy to do on here because we can look via session structure. If I was getting in here, I'd be looking at targets like this level here is a lovely target. You can see session lows are targets. You can see previous battlefields are targets. Previous structure are targets. All those green lines are targets. All right. And you have to understand, oh, we smash through the first target, no problem. That's fine. Okay. Now, as we smash through this first target, I'm not going to lie to you guys, I'd be protecting my position. I'd be very, very concerned here that this market wants to come back into a premium over here on this yellow line. I would be. I'm not going to lie to you. I'd be looking on a smaller time frame saying, yep, we came here, boom, okay, no problem, we're taking liquidity, but I'll be concerned us getting back up here. Let's hit play and see what happens. Watching it. Let me go to a bigger time frame. I'm going to go a week. Taking that next part of liquidity of it, near to taking it, took that liquidity, gone to hell. Great. So from time we're seeing this here, I'm now looking at this as there's a new trend. There's a new energy in play, and that trend is at this angle. Yeah, this market is accelerating bearishly. Yeah, it's not getting any less bearish, it's getting more bearish. Yeah, but then again, all of those data points, all of those touches becomes points of interest. So when this market makes a retracement here, this is a point of interest. So when the days have gone on now, and for whatever day this is now, Wednesday, Thursday, I'm looking at here, Asian session that this market came and tapped into the top of a range. Yeah, we'd be sleeping here. We'd be waiting for London to open. London opened. Yeah, see how London opened? Stop. When London opened, I'll be looking at it, the fact that this market came and tapping into a potential manipulation pattern in here, okay, that potentially liquidity was taken from here. The market's had a reaction. Brrr. Is this reaction necessarily going to break this trend structure here, this last high? That would be the concern. And that will be the concern, to make sure that you're taking your profits at previous battlefields or protecting yourself at previous battlefields. Could it decide to come up in here? Yes. But based upon how it's been trading, it's been making highs, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs. You're not expecting this market to necessarily break above these levels. You're not expecting to break above this level over here. Okay, so therefore taking your profits before it gets to there makes sense. Let's see what happens. Now what happens here is the market has got to the bottom of the range, did get to the bottom of the range. This is the impulse coming down now. And though you took your profits here, fine. Yeah, the market went and searched out Asian session highs, fine. We now understand that we're in a retracement phase now of this market. This market is now retracing back up towards that premium that we was talking about. So even though we started to accelerate down, this market is now retracing back into that premium level. Yeah. Remember, we was in here. So if I was to change this line would simply change like this. So let me hide all of these things so it's actually, you can actually see what's going on. Let me get rid of all of these potential targets that the market smashed through. But now, this is the range. See it? And the market should be heading back towards the premium. So now I'm more excited trying to take a trade from here. Now I'm in that premium, trying to find an entry. All right. Anyway, guys, you can kind of see my mind, yeah, and see ways. There are something we don't know what the markets are going to go and do. We have to read and react. You've heard me a few times being like, okay, we believe we're going to keep trading within here, and then the market breaks outside of it. Okay, cool, that's fine. The market's done its bearish push. Now it wants to retrace. Where to? Well, I'll be looking at, for example, 50% of the entire impulse as a point, as a point, which is be about here. That'd be an area of a point of interest that I'd be looking at, thinking to myself, maybe this market wants to push back up into these levels. I'd be watching this market, and that means that therefore this little line I've drawn, if it had another little push up into here, that's this level. That's the level. This isn't a line. It's an area of interest. This whole area where this market started to kind of go sideways here is an area of interest. So I'd be watching this market, thinking to myself, okay, yeah, boom, I'm in for the buy, or I'm waiting to see what happens when this market gets up into this premium. And how do I know when to stop waiting? When I see an indication, correction, and continuation happening. For example, on the 15-minute time frame here, we've got indication. We potentially got correction with this wick. Are we going to have a continuation? Is the question. No. So I'm not in that trade based upon a 15-minute time frame. Now we're back up into these levels here. Let's keep playing it forwards. The market's coming to this area we spoke about near that 50% level. Okay, so we're watching it. All right, so now we get up into here. We've seen that some news come out, some volatility, market wicking up here. Doesn't close outside of this 50% level, but then we've potentially seen, let me drop down to my 5-minute, it might be easier to see. Potentially we've seen a indication below this structure here, indication. Are we going to correct without breaking this high and then continue below here to allow me to get into a trade and place my stop either above these highs or above the last high? Let's see. So on a bigger picture, the market has just indicated below this minor structure. It's corrected up to approximately 50% of that impulse right now. Watch, if I was to delete everything, show you, the market's corrected approximately 50% of this impulse, and then we've got a continuation with closing below here. So on the bigger picture, if we was taking it as a bigger picture trade, that could have been an entry. This would be an aggressive entry above the last high. This would be a safe entry above the swing high. Now in reality, we probably wouldn't be taking it for 25 for this huge zone here on GBP/NZD. All right, we'd be waiting again to zoom in and get a smaller entry. But that here, energy up into 50%. Breaking this minor structure, indicating, correcting, continuing, could be an entry. All right, we could turn around also here if we want to take a little more aggressive. Maybe we're just looking here and waiting for an indication, correction, and continuation below here. Let's see what happens. So maybe somebody else, one person is very safe, took that trade and said, "Yeah, man, I'm just taking that trade. I'm cool with it." Somebody else may have taken this trade a lot more aggressively above this last high here, saying that's their trade. Now, this has a much higher probability of getting stopped out than this, but I understand that they're taking it based upon this wick structure here, the market indicating, correcting, and continuing below this level. Obviously, you want to zoom out, make sure there's no concerns above, no imbalances, or whatever it may be. On an hour time frame, we do have a little bit of imbalance in here, but I believe the stops above here, but we have some above. Let's see what happens on a smaller time frame, and then we're going to be done for the day. We've seen the market get down to here in regards to our aggressive entry, taking us to that 1-to-1 level and then kicking back on us here. We're above this aggressive entry here. Cool. That's showing us that our aggressive entry level is not going to wash. All right. Especially with all of this energy above it. Let's see what happens with our safer entry. Safest entry. Okay. Let me make it a bigger time frame. So we're seeing how this market is pushing down. Our overall energy of what we want for this market is we want this market, this is me zooming out of what we want for this market. We want this market to ultimately be saying it's on some bearish energy, you know, trying to push down. All right. Now, where to? Well, where to straight away, I'd be concerned about this previous battlefield over here. And I'd be concerned about 50% of this impulse. Yeah. So around here. So I don't think there's that much left in it, but let's see what happens. Lovely. So at this point in time, we've gotten into that 50% level and tapped into this previous battlefield. I'd be making sure that I'm protecting my position. I'm making sure I've taken off my partials, and I'll be seeing to what's going on here. And if I see this market indicate correct and continue against me on a smaller time frame, I'll just get out of the trade. I'm done. Or if this is a night time and it's getting to be like I'm going to go to bed, Asian session's coming in, I don't want to hold, I'll get out of the trade. I've had enough. I've had a good trade. It's taking me in there. I've been able to clear on a smaller time frame. Obviously, this trade we said took an L. The bigger trade is only like a 1 to 2. But either way, I'll be moving my stop, you know, and squeezing up and making sure that I'm going to be profitable. Whether that's going to be a 1 to 1, a 1 to 3, whatever it may be, I'll be making sure I'm profitable. All right. Here, I'm expecting this to have a reaction from our previous battlefield and potentially start pushing up. Yeah. Breaking this previous structure here. Yeah. Or if I believe, because I've taken off all my lines now, so I can't remember exactly what the structure was. If I believe that this market is actually bearish, then maybe we're going to have a great trade of it continuing to push down. Yeah, maybe. Maybe this market's going to be, you know, bearish from in here and continue pushing down, and we're waiting for a larger structure to break. It hasn't broken on a weekly. It has broken on a daily, this little level, but it's tapped into a previous battlefield. So I'm expecting a reaction bullish before any type of bearish energy anyway. Let's see what happens. There's that bullish reaction that I'm expecting from this previous battlefield. Came up here for this market to continue being bearish, which it has done. Okay, and we're back into another previous battlefield. Okay, where I'm expecting to see some sort of reaction. Okay, and then ultimately the prize, or what we're going for, is, are we going to break this structure? This would be a significant break. All right, let's see what happens. No. We've seen the market indicate correct and continue against us. So that thought process before we have to get all the way up here, he's like, no, the market's doing something else, which is fine. This is much, much bigger picture. This is going weeks and weeks and weeks. This is going back to September, October, November, and that's fine.